right, so this is what I'm looking for. I'm looking for a rejection into this zone right here. This is a 5-minute or a 15-minute zone right here. I want to see how it rejects or how it reacts when it does tap into the zone, and we'll see which one I enter. But all right, so I'm actually done trading for the day. It was a good setup. I took 2 trades, as y'all saw. The first trade I entered, but it kind of like broke my zone a little bit. So then I got stopped out, got out of that trade. And then right after it stopped me out, it gave me a good rejection. It started rejecting very good off of that zone, even though it broke. And a lot of the times what happens is it's like liquidity grabs. So it'll just come up, fake everybody out, and just grab liquidity and then just shoot right back down. And that has happened to me in the past so many times. So when I saw that, I just re-entered, and then the market, it just started dropping, and I ended up hitting on that trade. So I will break that down. All right, y'all, so now it is time to break down some actual charts and get into the trade that I took today. Okay, now this trade was a banger, and I did end up getting out a little too early from the looks of it because the market is fucking tanking right now. But I do want to go over the trade that I took and break down everything, why I even took it and my thought process. So let's get into it. So right here, and this is the first thing that I always look at when I'm trading, I'm always looking at what direction the market is in. Okay, and in this case, the market is bearish, as we can obviously tell because we had a change of character right here. And let me actually replay this so you guys can see, me actually entering this. But right here, as you can see, I have a change of character. So this right here is going to be the change of character, and this right here is the break of structure, because this is going to be the continuation to that downside. But this is a change of character on the 5-minute, because on the 5-minute, as you can see, we were obviously uptrending. We had that high, we had that low, we had that high, we had that low. And since this was the last low that created this high, this was obviously going to be a change of character if we broke that zone. So that's exactly what ended up happening right here, right around market open. Before market opened, we ended up having a change of character. So right here, my bias already switched. Okay, my bias is already bearish now. So my mindset coming into this is, let's look for puts, let's look for puts, let's look for puts. That is my mindset coming into this. I'm not thinking, maybe we can enter some calls, maybe we can do, no, I'm just thinking puts. Let's make some money because the market is tanking. So I had my zones, and that's why I had the video recorded. I had these zones right here. I had this one, and then I also had this one. Now, mind you, I did have this one right here, but I think this broke before market even opened because it is a valid zone. So what I'm even looking for when it comes to entering these valid zones, like what is a valid supply and demand zone for me? It's a candlestick that causes that break of structure. So right here, as you can see, a candlestick before the impulse move to the downside or upside, depending if it's a demand zone or a supply zone. So in this case, it's a supply zone, so it's the downside. But what I'm looking for to make it valid is a break of structure. And this right here is a break of structure because we had that low, we had that high, and then we had this. So this caused that break of structure, and that's why this one's valid. And now right here, we also have one as well, but this is going to be on the 15-minute. So right here, this right here was going to be our backup one, I guess you could say. But this right here was going to be this is another option for us, because this right here caused that break of this whole like change of character actually, but break of structure. So that's why I had these two right here. So now at this point, I'm just waiting for the market to open and tap into my zone. I found what I'm looking for. Remember, number one, I'm looking for what? Bearish or structure. I want to figure out what structure is telling me what direction market structure is in, and in this case, structure is bearish. So then number two, the next thing that I'm looking for is what? Is POIs. So in this case, I'm looking for supply zones because the market is obviously bearish. So now all that's left for me to do is just do what? Is for me to just enter this trade using one of my entry models. So I did take a loss. I took a loss and I took a W, but the W always outweighs the loss. So, but let me show you guys exactly why I took this loss and what happened in my entry model actually coming into this. So since the markets just open, I know that the markets are very volatile, especially when they just open. So when it tapped into this zone, that's when I got in. So this was more of a risk entry trade, risk entry type of execution. So let's do this right here. Boom, right here. And that's where I entered, right here. Right when it, so this was my initial entry right here. Boom, just like that. But as you can tell, what did we do? We got stopped out because this supply zone that is our valid supply zone ended up breaking. It ended up breaking. But I lost a little bit because this is not that much. Like, this is not that much risk. Like, we're being honest, this is not a lot of risk. But then I ended up re-entering this right around here. Yeah, so I ended up re-entering this because I saw a good rejection. So I saw this tap into here, break this, and then I got stopped out. But then I saw a good rejection, a good rejection. So once it gave me that good rejection, I had the idea that, okay, it looks like we want to drop. It looks like we want to drop. This was just a fake out. Because mind you, this has happened to me so many times when I've been trading using this strategy. Like, I've seen it so many times. The markets will just come up, just kind of like fake people out and then reverse. And I've seen this play out many times. And once I saw that and once it started rejecting, that's when I entered. So I entered somewhere around here, and then my price target would have been my price target was here. Yeah, somewhere here, this low. So yeah, it was this low right there. And as you can see, it ended up just dropping, boom, 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 just dropping, doing crazy drop right here. And that was the trade. That was the trade. So the good thing about, you know, how I trade is that that first entry that I took was not that bad. Like, it was not a huge loss. And that's why I like the strat. Like, that's why, like, the strategy that I use is simple. If it breaks the zone, then I'm out. Now, of course, I could have held this zone. I could have held this trade a little longer, but it would have been, look at the risk. Look at the risk. I would have been risking way more. I'd rather just get out right here and then re-enter. Right, get out right here and then re-enter if I get a good rejection. And that's exactly what I did. And I actually explain this all the time in my videos. I go over this, how it's better, especially in options trading, for you to just get out and then re-enter, because, you know, contracts and the Greeks and data and all that shit, you know, holding on to contracts can really burn it. You're basically losing profits. So it's better to just re-enter. And that's exactly what I did right here. I just re-entered that shit. And like I said, maybe I got out too early. Maybe I got out too early, because look what ended up happening afterwards. It just started, boom, tanking. So as you can see, it just started tanking, and it had this break of structure. So this was the low, this was the high. So we can just highlight this right here, and this was the high, and then that's the low. So this is a continuation to the downside. But you see, very simple, just like that. And all I was looking for was three things. Remember, three things. The trigger three, my three things that I look for, and then I pull the trigger. Number one is going to be market structure. Number two is going to be what? Supply and demand zones, POIs, supply and demand zones. And then number three is going to be an entry model. And my entry model that I used today was a risk entry. Okay, I used a risk entry today. Confirmation entry, there was no confirmation entry. I guess a good confirmation entry, because I did have people asking me on Instagram, like, confirmation entry. This right here would have been a confirmation entry. So let me show you guys. This right here would have been a confirmation entry. So as you can see, we reject, and then we have this candlestick that creates this new zone, this new demand zone, or supply zone, I meant, which is right here. So I would just use this whole thing, and then that right there would have been the confirmation entry. But this is way too big. And also, if that's like your only entry model, then the thing that sucks about this is that a lot of times you'll miss out on good trades because you're waiting for that confirmation that doesn't end up playing out all the time. But yeah, so I took that, 2 risk entries, and that was it. That was basically the trade that I took today. Very simple. But here's the thing that I want to go over is that, and I really want to highlight in this video, is that just because you take a loss does not mean that it's over. It doesn't mean that you need to just fucking just feel bad about it. Because at the end of the day, I took this loss right here, but I didn't feel no type of way, because at the end of the day, I knew it was a part of my strategy. I followed my strategy, and it just didn't work. And I re-entered, not because I wanted to revenge trade or because I wanted to enter another trade to feel good, but I took it because I've seen this happen multiple times. I've seen zones where they just wick out and they give me a good rejection, and that's happened multiple times. So that's why I took this trade, and it was a part of the strategy, because I know that a lot of the times this will happen right here, just like this. It's a fake out, but it's still following through with my strategy. One thing that I did risk, I will be honest with y'all guys, is that this could have just came up into here and then gave us a rejection here. But the reason I didn't wait is because the market was giving me something different. And this is why I like to say trading live is different than like back testing, because right here I probably would have, like in a back testing session, like if I'm being real, I probably would have waited for this to tap into here in a back testing session. But in real life, as you can see, like the price action was way different. Look at the rejections. Look at how the candlesticks close. This is giving me all the signs that it wants to reject right here and not up here. So that's why I took that trade, and that's why I didn't wait for it to come into here. If it gave me better signals, like that it wanted to come up, like if the candlesticks were reacting better, then I would have waited. But right here, it was just showing me that it wanted to slow down. Plus, I had structure on my side. So that's another thing. That's why I was so confident, because I had structure on my side. When you have structure on your side, you're not really that like hesitant. You're just like, okay, I understand, like structure's on my side. So it is what it is. But other than that, that is basically the trade that I took today. The two trades that I took today. Y'all let me know what y'all think. And it was a very easy, simple trading day today. Very simple when you follow your rules and you are disciplined. But other than that, that is basically it. And I will see y'all guys tomorrow if I do take a trade, so I can break it down and review it. But other than that, that is it. And yep.